What's up, guys? I hope you are all doing good. So in this video, there is something very important that I want to address when it comes to V75. I've discovered that a lot of us, we trade this market as scalpers, and this is a method that I prefer. That's the best method that you can use as a trader. It is to attend this market as a scalper. So when we are scalping, mostly when we're using price action, there are a few things that usually defeat us as traders. So the most important one is the one that I'm going to highlight here. That usually when we analyze as traders, we are afraid to actually take decisions at the right time. For an example, in this market, let's say you just want to sell this market. Let's say you want to take this as a sell. A lot of traders will be afraid to take a decision immediately when the market show that red candle there, when it tries to go all the way down. But majority of the traders will take the sell when the market is here, which is not something good, which is not something profitable, because immediately when you take the sell here, you position yourself in a place where you don't even know where to put your stop loss, where you don't even know how much to risk. And immediately when you sell, the market pushes down, you feel excited, and then all of a sudden it goes all the way back. And you feel pissed off. So that's something that usually happens. And why is that? It is because a lot of us as traders, we have a mindset of a follower. We have a mindset of usually like following what is already clearly visible. There is a lot of things which are bad about that approach, and there are also a lot of things which are good. The good things is that we should follow the market, but we should follow the market in the scale of a trend. For an example, let's say you discover that the market is moving down. That's what you should follow. That okay, the market is moving down, meaning the sellers are stronger than the buyers. So it means that I should be focusing on the side of the sellers, or I should be looking for selling opportunities, because that's the side which is strong. But what you should then do is that you should follow it on that trend level, or on that approach where you observe the trend and you follow the trend. But when it comes to entering your trade, you should try to anticipate the moves. You should try to enter before the moves are clearly visible. For an example, if the market bounces here, let's say you see it bouncing here. If it bounces here, one confirmation that you have is that, okay, this area, it is a resistance. It is a resistance area. So when you see a red candle coming in, and immediately when you decide to sell maybe somewhere here, you will be selling and you will be risking less. Why? Because the stop loss is going to be somewhere here. And you will know that when the market comes and hit your stop loss, it will be a sign of a breakout of this resistance, and it will mean that now we should look at the market in the eyes of the buyers. But if you sell there, you don't know where to put your stop loss. That's why a lot of traders, they don't put their stop losses, because it is not reasonable to sell here and put your stop loss all the way up there when you are scalping. So it will be just a waste, and it will be a huge loss. So what you should be doing as a trader, make sure that you pick those smaller pieces. For example, even here, when you see the market approaching that area, you see it bouncing, don't wait until it's here before you sell, because you've observed these small patterns and you've observed that the market is bouncing in a resistance area. That should give you a confirmation, and you should be bold enough to say, okay, I'm gonna take the sell here. Because when you take the sell here, the moment the market goes all the way down here, you will be taking your profits, and other people will be looking it as a buy, and will be looking it as a sell, and then the market will turn against them. So make sure that you always try to enter early at the early stages of the market. That will give you an opportunity to even be able to act when the market doesn't go on your favor, or on the side that you anticipated. When it goes all the way up, you'll be able to quickly say, no, this is now a buy, because it's a breakout, and also there's some few confirmations. So make sure that you always approach the market with boldness. Don't be afraid that, no, what if it doesn't go on your favor? If it doesn't go on your side, it means that then you need to change and become a buyer. It's still an opportunity for you. It's still a signal for you. And if it doesn't work, you will lose small amount of money compared to what you're gonna lose here, because the moment you sell here, you know that you are not selling because you've analyzed. You are selling because you can't afford to lose all these red candles. And if you can't afford to lose all these red candles, it means that now you are just using your emotions to say, no, I want this. You didn't even analyze. So make sure that you always analyze and enter the market early. So that's what I want to highlight with this video. Thank you.